All right, welcome everyone and good afternoon. Welcome to our new webinar titled Mastering Law Firm Accounting Strategies for Financial Success. My name is Brian Figueroa. I am the president at ShiftSixOS. Here at ShiftSixOS, what we do is simple. We help law firms source and place administrative staff for a fraction of the cost without sacrificing the experience and quality. I want to take a brief second here to introduce our guest speaker, Peggy Gruenke from CPN Legal. Peggy is a legal accounting guru and co-founder of CPN Legal. Peggy has over 20 years of experience in the legal industry, so she definitely knows her stuff, and we're very happy that she's here with us. Peggy is also a certified Clio consultant and a frequent speaker on legal technology and law firm operations. Welcome, Peggy.
Thank you, Brian. Thank you for this opportunity to talk about one of my favorite topics is helping lawyers understand their businesses better so they can build a more profitable business. We're located in Cincinnati, Ohio. Our business was founded on the niche of doing bookkeeping for law firms. So we only do law firms. I've been in the law firm industry for 20 some years. So I have a deep understanding of how law firms operate. I actually used to manage a law firm for 8 years, and I was a director at the Cincinnati Bar Association for 5 years. So been in a lot of different shoes, have worn a lot of different hats to bring all that knowledge into CPN Legal, where we focus on working with lawyers, bringing them in, doing their bookkeeping, helping them understand their finances, helping them grow. And that's probably the most rewarding thing we do when we work with our clients, is we actually see their businesses grow as they hire more people, their revenue increases. We talk more about utilization, we get into more KPI reporting, all to help them have a better understanding of their business and what's the next path they should take.
Awesome, and I appreciate you joining us to talk about this, because this is a topic that is often a big lift for most law firms, especially when it comes to mapping out the business side of the law firm and how to get that efficient growth that's predictable year over year over year. So thank you once again. Our agenda today is going to be pretty straightforward. We're going to be discussing in how to understand law firm accounting and the basics of law firm accounting. We'll also be discussing key strategies for efficient bookkeeping once your foundation has been set. After that, we'll be discussing financial workflows for law firms and best practices. And Peggy has been so kind to agree to share some success stories from some of the firms that she's been working with. And if time allows, we'll have a little Q&A session at the end for any of the attendants if they want to ask anything to Peggy or myself directly.
Thanks.
You ready, Peggy?
I am.
All right, let's jump right in. So to understand law firm accounting, what is the primary objective of effective law firm accounting practices?
So I actually broke this down into 6 different points because it's kind of a loaded question. The first thing was the main purpose is to run a profitable business. Okay, that's our first goal. Part of running a profitable business, we have to understand the concepts of where you're spending money and does it make sense. In that regards, what we look at is the percentage of your expenses as a percentage of your income. So how much of your marketing spend how much should you be spending on marketing? Is it 20%? Is it 18%? Is it 10%? We look at payroll. We look at a lot of operational expenses, but we look at it in relation to your revenue, okay? I'm not a fan of cutting expenses. You never grow a business by cutting expenses. You grow a business by growing revenue, okay? The number 3 thing is we understand where your revenue is coming from. So we want to look at, from a law firm perspective, what practice area is bringing in the most money? What practice area is the most profitable? Maybe by lawyer, you want to look at revenue by lawyer, see who your big producers are. Number 4 is we want to understand a concept called your monthly nut. And this is really integral to having a good accounting system set up. Your monthly nut is your fixed monthly expenses. So how much are you spending per month on everything? Payroll, software, rent,
overhead.
You name it, everything. And what is that number? And that's your target number for the month when it comes to revenue. So you know that if your fixed monthly nut is $15,000 or $20,000, your goal is to bring in $20,000 a month in revenue, so you're breaking even. Your goal beyond that is to grow and bring in obviously more revenue than you're spending, so you can see some growth. But that monthly nut is a really interesting number. It actually forces lawyers to look at really where we're spending money and understanding that. The other, number 5, is understanding your cash flow. And we'll talk more about cash flows further on in some of these questions. We want to know, when is the money coming in, all right? And what expenses are going out, so that we can project 3 or 4 weeks out to make sure there's going to be enough cash available to cover all those expenses. And we're going to talk a lot about billing cycles too in a little bit, Brian. That comes hand in hand with that. And the 6th thing to have a good, effective law firm practice is reconciling your bank accounts. You have to make sure that all your accounts, credit cards, operating accounts, savings accounts, trust accounts, are all reconciled monthly, so that you can trust the reports that you're generating out of your system. And what will happen is, if you're not reconciling your accounts, you may be missing things that were double recorded, a missing deposit. There's all kinds of things that can snowball by not having reconciled accounts.
Awesome. I appreciate you sharing that. So you described a few factors that, can also be seen in accounting for other verticals and other industries. So what is unique about law firm accounting that, really separates it and makes it its own unique, uplift and monster of its own when comparing to other verticals?
First, I'll answer that question, but I actually want your listeners to understand that law firms are the simplest business there is out there. It should be a profitable business. It's not a complicated business. You don't have inventory to deal with. You don't have widgets to count. You don't have all that stuff. You sell your services, you do the work, you get paid. There it is. So but there are things unique to a law firm business. One of the things is client advance costs. Those are the expenses that you're paying on behalf of your client to later then be collected upon, right? So managing those client advance costs becomes a very integral part of your success, because if we don't have these set up correctly in your chart of accounts in QuickBooks, we're going to have problems. If you're not billing for these expenses as they're incurred, you're going to have problems. So client advance costs is definitely a unique thing to law firms. And then, of course, your trust accounting. The trust accounting probably jumps out as the most different one. We're going to get there. When we talk about trust accounting, what you want to think about is, when you're called upon to get audited, which will happen, can you supply all the documentation needed that the Bar Association is going to look for, ask for, as they go through your audit? And one of those key reports is called a trust 3-way match reconciliation. And that is taking three components of your business on the trust accounting side and making sure everything is equal to the same numbers. So we do a lot of trust cleanup. To tell you the truth, Brian, when we take on new clients, we're helping them clean up their trust account. It's probably the most neglected area we see when we take on new bookkeeping clients, which actually shocks me, because it's also the one that makes lawyers most vulnerable to having potentially getting discharged from the state bar.
Yeah, there's so much oversight over trust accounting that it's interesting that that's also the most neglected.
Yeah.
It almost, to me, it almost feels like it comes from a place of not knowing how to effectively set that up from the get-go, as opposed to, having to be an afterthought or having to, troubleshoot that later on when it is an issue, right? It's almost better to be proactive with it than to be reactive with it when things are hitting the fan.
That's a good point. They think they have it right, and then when you put it on paper and you actually produce the reports, they visually see, oh, it's not right,
Right.
So yeah, and maybe it's done facing the truth for the first time. So
right. And I guess that leads us to our next question. How does effective law firm accounting contribute to the overall success of a legal practice?
First of all, it has to become a habit. Okay, if it's habit forming, you're going to do it consistently and you're going to be on top of it every single month. So you first have to make it habit forming, not a twice a year event, a monthly event. especially when it comes to doing your trust three-way match reconciliations. That has to be done monthly. Um, when done well, okay, and what I mean by done well, when you're setting up your accounting system, your legal accounting system, is you need to have a good chart of accounts. And I'm gonna always refer to QuickBooks because it's the most commonly used accounting system out there, right? There are other ones. So inside of QuickBooks, you're going to set up a chart of accounts. And if your listeners aren't sure what that is, a chart of accounts is really a way for you to map expenses and income so that they're categorized correctly. So we want the chart of accounts to tell the story of your law firm. All right. So how much did you spend on rent? How much did you spend on software? How much did you spend on supplies? How much did you spend on meals? You know, how much did you spend on marketing? And when we talk about a chart of accounts telling a story, there are a few accounts that we like to break down into sub-accounts. So they know, and those particularly are insurance, because you'll have different types of insurance. One, malpractice probably being the biggest expense, right? Some of you are going to have business insurance. Some of you might have health insurance for your employees and yourself. So we break those down. And marketing is another big one we break down, because marketing is one of those black holes that if you don't know where you're spending money, and if you don't know what return on investment you're getting and seeing it reflected in the revenue number above, you got to be questioning what you're doing. So on the marketing chart of accounts, we'll break that out into what your spend on your website, what your spend on SEO, what your spend on online directories like Avo or Super Lawyers. So we want to break that down so we have a better picture of how the law firm's spending money. It actually, when you break down, you have your P&L report and you're running your reports monthly, you want to actually do a trend analysis. And so what we do is we run a P&L report by month for the year.
Okay.
So when you look at that report, you can see each month where your spend is in all those different categories, along with what your revenue is, which is always at the top of your P&L. So we want to make sure that it becomes a habit, reconciling your accounts, producing your reports, looking at your reports. And if you don't know how to read them, get some help reading them. But you can't talk the talk, you got to walk the walk. So that's what makes it successful.
And I'm sure the data shows that story almost immediately, right? Yeah. Where they might believe that they're trending in another direction, but in reality, once the numbers are in front of them, once they can identify where the downsides and the spikes in business are, they get a better understanding of how they should progress for the next step.
The visual presentation, even when we convert the data to charts, I think that tells a nicer story. They'll look at it, but when they're looking at it for the first time working with us, they'll be like, oh, I didn't know I was spending that much money on that stuff. What is all that stuff? Or I thought my revenue for estate planning was going to be higher than my revenue for family law. So there are things they look at, to your point, that make them have a better understanding. Our most successful clients, that we've got 300 bookkeeping clients, our most successful businesses as a business client are the ones that we know are looking at their financial packet every month, because they're pinging us back with questions, right? Or they're requesting, hey, let's have a call to go over my reports. Those are the businesses that are taking the time to understand the reports and will thrive.
And those are also the businesses that probably learn and adapt better and are able to build the systems to make sure that their accounting stays in tip-top shape throughout the entire length of their business.
Yeah.
That's awesome. That's really cool. All right, so that kind of brings me, since we were talking about trust accounts, I wanted to ask, what are some of the best practices for maintaining compliance with trust accounting and regulations related to trust accounting?
Great question. So we want to be able to, there's going to be 3 things that you're going to have to save and preserve, because the Bar Association, if you get audited, is going to come asking for them, right? So we want copies of the statements, the bank statements, downloaded from the bank, save them electronically as a PDF, create a folder for your trust account reconciliations, okay, by month. Then you're going to reconcile the bank, that trust account. And if your listeners are not using accounting software such as QuickBooks, they may be keeping a paper ledger. That's fine. I would encourage you not to, but in today's world, but if you're keeping a paper ledger, you still have to have a way to reconcile that ledger, all the ins and outs of the bank bank account to the actual statement, so that your ending balance matches it, right? When you're using a product like QuickBooks, you go through the reconciliation process. You can actually print a reconciliation report. Okay, now when you print that reconciliation report, there are a couple things we want to look for on that report that can come back to bite you when it comes to trust accounting. One is unclear checks. So let's say you wrote a refund check to a client 6 months ago, and because you have good systems, accounting systems set up, which we're talking here, Brian, about, right, is when you wrote that check to your client, you actually recorded it in QuickBooks in the register, which is something that doesn't happen a lot. So it becomes a problem. But we want to know what checks haven't been cleared yet, because eventually they're going to be stale dated, right? But it also has to be dealt with, because if it does get stale dated, you got to put that money back into your bank register by voiding that check and rewriting the client a new check. So there's a lot of complexities around unclear checks, okay? There's also a lot of complexity around you not recording the check that you wrote in your QuickBooks register. Because now, let's say you have to close your trust account. Say it got frauded, for God forbid, but say something happened. You want to change banks, right? You want to change banks. Before you shut down that bank account, that trust bank account, you have to make sure that every check is cleared. And we've had 3 clients do this. Shut down a trust account, open a new one, and lo and behold, there were outstanding checks that got cashed and their account went negative and the Bar Association came knocking at the door. Now, we were able to help them get through that difficult time, but it is something to be very cautious of. So we've got statements, we got a reconciliation report, and the last report is called a trust 3-way match reconciliation. We do this in Excel, we build a template, but you're taking 3 elements of your accounting system. One is the 2 of these elements are on a balance sheet. And we didn't even get talking about the different types of reports, Brian, but a balance sheet report is one of the main financial reports you need to look at every month. And that balance sheet is going to list your assets, your liabilities, and your equity accounts. We're interested in 2 things when it comes to the trust account: the bank balance and the liability balance of your trust accounts. Those have to be equal at the end of the month, those 2 numbers. Now there's a third number, which makes it the third leg, right? The third leg is the trust balances by clients that should be in your law practice management software. Okay, Clio does a great job of managing trust. Most law practice management softwares do. But the third leg is going through that software you have and making sure that your individual client ledgers total up to the number that's on your bank account and your liability account. So that's the 3 things we need to have. And that 3-way match report is one that you should be able to present every month and show that it's clear.
You got to make sure that all 3 steps match and really leverage technology to make sure that, it makes the job easier, right? Because there are so many wonderful softwares like Clio that do integrate seamlessly with QuickBooks that allow you to push from one end to the other and keep all the accounting in line, making sure that things are getting updated as opposed to having to be an afterthought, like you mentioned earlier, where you kind of go back, check it, revise it, or input it at a later date where, it could have potentially fallen through the cracks, or use the Excel sheet if they're still, using the more archaic system. Yes.
Yeah, you hit on a good point when it comes to integrating Clio and QuickBooks and other softwares. It's happening in the moment. So as bookkeepers, when we see data for trust accounting sync over to QuickBooks, it's right in front of our eyes. So we know something happened in Clio. Either a deposit came into somebody's trust account, or they wrote a check out of the trust account, or they paid one of their invoices. And all that information syncs over to QuickBooks automatically for us to capture and reconcile out on a daily, weekly basis, so we don't have any surprises at the end of the month.
So when your clients do have surprises, what are some strategies that you use to address those client concerns related to billing and accounting?
Oh, yeah, there's always a lot of surprises. I will say, the good news is once we start working with them, the surprises go away. But when we're onboarding new clients, there's a lot of trust account messes, okay? And the strategy we use to review these is we actually go back in history and produce a report that's we actually get down to sometimes the week or the day, and we put all this data into Excel, we run this report that tells us at what moment did the bank balance become unbalanced with the liability account. Okay, so that's one of our tools, and that's a QuickBooks tool. We're looking at those two. We want to find the exact day that those two became out of balance. Now, they may have never been in balance. A lot of times what we see is when you're going through a migration, okay, a lot of people migrating from a PC Law product or Amicus product to a product like Clio and QuickBooks Online. They're taking their trust data out of that legendary system they've had forever, and we're going to put it, making sure they get set right up in QuickBooks and Clio. Sometimes steps get missed on those migrations. All right, so we have to go back and actually look at data out of the other systems. But we do have really good processes in place to help identify where it went wrong. To tell you the truth, Brian, sometimes we can't. Sometimes this is something that may happen 10 years ago. And because they weren't doing this habit of reconciling their trust accounts every month, they never noticed it. So sometimes it comes down to just a gut feeling, and we have to ask the lawyer, look at these numbers in your law practice management software. These are your current trust balances for these clients. To the best of your knowledge, are those correct? And they'll say yes or no. They'll say, no, I know I sent that $5,000 back to that guy 3 years ago. Well, let's fix that one. But at some point, he's going to have to declare that that's the numbers. And then we do what's called a true up. And sometimes that true up means that we have to move money from the trust account to the operating account because they never did it at one point in time. Or more painfully, we have to move money from the operating account to the trust account because things got double transferred. We had a client that was actually paying their credit card out of the trust account, which was a huge mess.
Yeah.
So there's a lot of things that happen in that trust account that you don't want to become victim to. So long story, that is everything we have to take into account.
No, that's awesome to know, and you're totally on point with managing the trust account, right? With there being so many guidelines and procedures to make sure that those are kept in tip-top shape, like I mentioned earlier, they should have that habit from the get-go. So what are some, besides using and leveraging technology, what are some other practical tips that you would recommend for streamlining income and expense tracking for law firms trying to set up these processes?
Before I get to that, I want to mention one other thing because it's important. And it's back to the trust account. And it's back to client advance costs. Okay, so now your client advance costs, a law firm has two ways they can account for these payments. Let's pretend we're paying filing fees or register of deeds or filing fees to a court, right? Sometimes those expenses can get written out of the trust account, okay, because the client has funds in trust. So we can actually write a check out of the trust register for the $100 filing fee. We just have to make sure that that $100 was also recorded in the law practice management software so things always match. And with the integration set up, we always see that. The other thing with client advance costs is they actually pay them out of their operating account to later rebuild and collect it. But I wanted to point out that there are a fair number of law firms that actually do pay, we call them third-party payers, out of the trust account, which is fine. But that's when it's really important to make sure all those checks have been added to the trust register when it comes down to reconciling it.
And also recorded.
And recording it, yeah. So you asked about technology, streamlining?
Some other, aside from technology, or maybe more about technology and how they can leverage technology to streamline, income and expense tracking for their firms.
We haven't, CPN Legal hasn't got deep into all that AI stuff yet, and I doubt that we will at any time soon. We're pretty hands-on, and we like checking the numbers. But QuickBooks has a couple integrations that we use that are technology-based. So one of the ones is when you set up your QuickBooks, you can connect your bank accounts and your credit cards directly to QuickBooks. So there's no hand coding of transactions, okay? And the other thing that's nice about that, when the bank is connected to QuickBooks or the credit card, when an expense, let's go to the credit card, for example. When you go to Amazon today and charge that $100 to buy supplies, that $100 that happened on that credit card is going to sync over to QuickBooks and sit in a holding area. We call it the bank feed area. And it sits there for us to have the ability to review that transaction, make sure it's categorized correctly as a supply before we add it to the credit card register. Now, in that road, think about how quickly that bank feed area, that holding area, can fill up with transactions, right? So inside of QuickBooks, we use a technology called rules. So we can create a rule that tells QuickBooks, hey, every time you see something come in from Amazon, book that to supplies. And it saves us time, right? So we don't have to look at each transaction. So that's one of the ways we use that integration with QuickBooks, is using those bank feeds for the operating accounts, the trust accounts, and the credit cards.
It's
Okay.
automating the process more entirely to make sure
Yeah.
that you spend less time on it, but that it still gets done well.
Yeah. A lot of times when we take on new clients, we find out they never connected their credit cards to QuickBooks, and they were manually entering all those transactions, which is just a total waste of time.
Right.
You can also import them into QuickBooks, but we much prefer to use the technology that's staring us right in front of the face there and use that for sure.
Yeah, if it's available, definitely leverage it, right?
Yeah. The other
Absolutely.
integrations that we use, and we've talked about this before, is the integration between your law practice management software and QuickBooks Online. Okay. Some of those integrations are better than others. I've used my case, I've used Practice Panther, I've used Rocket Matter, and I've used obviously Clio. Hands down, Clio's integration is definitely one of the better integrations with QuickBooks Online. Keep in mind, listeners, it doesn't integrate with QuickBooks Desktop. It's QuickBooks Online that the integration is where you want to be at. And that eliminates double entry. Sometimes law firms are working with bookkeepers that don't understand how these integrations work, so they don't use the integration. So the bookkeeper is spending more time hand entering things. Okay, there's a lot of other value to the integrations, and I'm going to touch on it right here since we're here, Brian, and it's going to come up again. And one of your questions is with that integration set up, this is going to focus, for example, on revenue. Okay, when you have revenue come into a law firm, that revenue can be broken out into two buckets. One can be revenue for actual legal work completed, and one can be income related to being reimbursed for expenses. Okay, so say you create an invoice that has $100 on it for services and $50 on it for a filing fee. In Clio, when that invoice gets paid and syncs over to QuickBooks, QuickBooks automatically splits that payment into $100 for fee income and $50 to expense reimbursement income. So it offsets that expense that you booked when you wrote that $50 check. Okay, so when you write that $50 check for a client expense, you're going to book it to an account called cost of goods sold, or it may actually be on your asset account. Most of your listeners are probably using a cost of goods account, or you should be. So anyway, then we'll map the integration to relieve that account so it's not booked as income. So I wanted to point that out, that that's important when you set up these integrations, that you understand how things are mapped over.
Understand how you're bucketing those expenses that come up.
Yeah.
Awesome.
We've had plenty of people turn on those integrations all wrong, and would have to go back and rebuild 6 to 9 months of their QuickBooks, which is very expensive.
So this is all very second nature to you, but how do you communicate with clients, on the best tips to prioritize and ensure that their bookkeeping is consistently managed?
That's an interesting question, because most time we're doing the bookkeeping work, but for clients, we have a few clients that are doing their own work. It's all about training. And when we engage with a client, even if we're going to do the bookkeeping work, but they're new to QuickBooks Online and they're new to Clio or another product, we spend our first two engagements with them are scheduled training sessions. So we want them to understand as a lawyer how this integration works and how things end up in QuickBooks. And once they get into QuickBooks, what are we looking for? How do I make sure that rent got coded to rent correctly, or things got coded correctly? So we take the time to actually train them on that. They usually get to a point where they're like, I'm done, that's fine, you guys got it, I got it. But we always start with training is the first thing, okay? Because this is all new to them for the most part. Sometimes you're lucky and they come in with a little bit of experience on how to read a profit and loss statement or a balance sheet. The other thing that we do with clients is after we've produced our financial packets, or if we're training a client how to produce a financial packet, and a financial packet includes a variety of reports, always your balance sheet, your trust three-way match reconciliation, your profit and loss report by month, so we can look for trends, right? And then we also do a profit and loss report comparative to last year at the same time, so the lawyer can see, am I growing from last year or
Right.
shrinking from last year, right? That's probably one of my favorite reports. We're on the growth side most of the time. And then the other report we run is a profit and loss as percent of income, which really makes them look at their expenses as a percent of the revenue that month. Okay, how much, what percent went to marketing, what percent went to payroll. So those type of reports we review with them when we first start working with a client until they feel comfortable looking at them themselves. So it's all education in that
It almost
regard.
sounds like a better use of time would be just to contact someone like yourself who has the expertise to be able to come in and kind of start that process
Yeah.
with them. And as they continue growing, then they can start learning a little bit about the process so they can handle some of the stuff in-house.
Yeah,
And then
exactly.
call you for all the heavy lifting, all the stuff that really requires, your type of attention to detail to make sure that they can stay, compliant throughout.
Yeah. The other thing is we're big on communication with our clients. And so if we're doing their QuickBooks and we see a transaction come through on a credit card that looks suspicious, we're going to email the client right away and say, hey, there's a $1,500 charge from this vendor that I don't recognize. We've caught a lot of fraudulent charges that way.
Oh, wow.
So if they're not looking at that, they're never going to catch those fraudulent charges, and they're just going to pay their credit card or look at the statement 2 months later or 3 months later, where it's kind of old news by then, right? So we're looking for things like that. We had one client who had in one day 150 Uber charges come through his credit card.
That's
150. And they were various amounts. It was obviously fraud, right? So we caught it right away, and we're able to say, hey, you got to contact your credit card company and turn it off, and then we got to get these reversed. But that's why you want that habit of looking at stuff every week.
Right. You want it to already be built, again, to be more proactive with it as opposed to reactive and not end up in the hole with 150 plus Uber charges or whatever fraudulent charges may be being conducted at that time.
Yeah.
That's interesting. So how do you stay informed about the changes in regulations and compliances with bookkeeping practices specific to legal?
We obviously CPN Legal has our own CPA who does a lot of education classes. So we'll send our head bookkeepers to some training classes on that. A lot of times it's just reading and being knowledgeable about what blogs to follow, what articles to follow when changes. Like this year, a big change was in how meals, actually it was last year, and how meals are taxed. Before 2023, they were all 100% deductible because of COVID. But in 2023, the IRS went back to having most of them be a 50% tax deduction and very few of them be 100% taxable. So we had to communicate that with our clients, help them understand which ones are going to get booked as 50% and which ones can legally get booked as 100%, right? So that's how we pretty much stay on top. We're not doing tax work, so we don't have to be quite as compliant. We're just doing the general bookkeeping side of it and making sure that we're aware of what's going on and following the information as it comes through. We also do a lot of payroll for our clients, setting up payroll and running payroll, adding new hires, adding 401k deductions, and that's complicated. Health insurance. So those things I have a payroll department, and those two people go through compliance every year to stay up on top of the payroll in the various states.
No, that makes absolute sense. So when they're designing an effective financial workflow, what are some essential steps that they cannot, or by they I mean just law firms and lawyers in general, that should not be ignored?
Let me see. Let me get back to my notes. All right, I'm going to start with building a great chart of accounts, making sure you understand where your expenses are and where your income's coming from, right? Making sure that your chart of accounts is accurate for a law firm. We have a basic chart of accounts that we use for all of our law firms because it's unique to a law firm business, such as those client advance costs. We want to make sure we have those accounts set up right. We want to make sure that when you set up that chart of accounts that you're breaking it into sub accounts to tell a good story. All right. The other thing is that We also want to make sure that you have somebody in the office, if you are delegating this bookkeeping work to, that they're being, lack of a better word, monitored, right? And they might not know how to do trust accounting. In the end, the lawyer is responsible for making sure his trust account is accurate. You can't pass that duty on to somebody else. It's always the lawyer's duty. So if you have somebody else doing that type of work for you, make sure that they know what they're doing and that it's being accurately done, right? The other thing is that this is going to get into cash flow reports analysis, okay? So when you're building a good accounting system, right, you're talking about building a good accounting system, one of those pieces that you want to have on there is the cash flow report. So that cash flow report is something that becomes a habit, and it's going to help you understand what has happened and what's going to happen in the future weeks, so you know if you got enough money coming aboard, okay? So you might know that if you got payroll and rent coming out in the same week, you're going to know that you better have enough money in the bank. Maybe you need to run your billing a few days ahead of time and get some of those trust funds transferred over so you have enough funds to cover payroll and rent, right? The other big expense that comes out of clients' accounts the first of the month are credit card fees, right? So if you're running a lot of credit card fees, that's going to hurt that first week of the month. So when we get into building accounting processes, one of the key things to cash flow is billing, right? So when we look at the cash flow report, we look at his billing cycle because they tie together. And if you need to be billing twice a month, cover your cash, then bill twice a month. We do invoicing for about 80 of our clients, and about 95% of them bill twice a month. It's amazing. And they also get trust retainers, and they replenish those trust retainers, right? So when you're talking about having enough money, having a good P&L, right, a profitable business, we got to make sure the income's at the top. All right. I said I don't nitpick expenses. Expenses are going to be what they are. You might find that you can cut a few expenses. Cutting expenses is not going to make you a more profitable business. Building revenue is going to make you a more profitable business. So that's some of the things we go through on that side. In addition to the cash flow report and billing, there's a really other important component that ties into this, and it's utilization. Okay, so we want to know as a business, and we run these KPI reports for our clients. If you have attorneys and paralegals in the office working 40 hours a week, right? How many of those hours are actually getting on a client's bill? So that's called a billing, the utilization rate, right? So we run that analysis weekly for our lawyers, and they can actually visually see, oh, Joe only reported 10 billable hours last week, but he was here for 40. What did he do with the other 30 hours, right? So that utilization helps the lawyers predict future income, all the WIP. We know if we're going to do a billing, are we going to have enough come in? The other thing with that utilization report is it also can be a good indicator of when's it time to hire, right? So if you've got people working, overutilizing their time, which would be great, but that means they're also probably working overtime, right? And might be an indication that you need to bring in some support staff, which is where Brian can help you, right? You need to bring in some, whether it's a full-time person or a part-time person, but what you don't want your staff to get in the habit of is working overtime, because it's really hard to stop it, because they start living their life and spending personally based on the fact that they're working overtime, right? We went through this with our own business, Brian, and we did a utilization analysis, and we found out that we could get more work, a little bit more work out of our bookkeepers if we arranged what tasks people were doing, okay? So we moved some different tasks off our bookkeeper's plate and put them onto our accounting assistant's plate so that the bookkeepers could spend their time doing more billable client work. So it's stuff you got to look at, but the utilization really ties tightly into the profitability of a law firm.
No, that makes absolute sense. And when it comes to setting up those financial workflows, we all know that no two law firms ever operate the same. How do you tailor it to fit that specific law firm that you happen to be working with at the time?
They're all the same. It's not the business, to tell you the truth, they're all the same little businesses, right? If you look at their balance sheet, they're going to have savings accounts, a checking account, operating account, trust accounts, right? Some people have multiple trust accounts if they do real estate work a lot of time, right? And then you're going to have credit cards on your balance sheet. So you're going to have a couple credit cards, maybe one or two. They may have loans. So we do have to look and see if they got a line of credit set up and get that, let them understand how that works. If they've borrowed money from somebody, we have to get that on the books correctly as a loan to the business. And then if they actually got, this is the big one that's out there right now, is the EIDL loans, those big $150,000 loans that people are slowly starting to pay back. So we want to make sure all that stuff is on the balance sheet, booked correctly for them, right? So then, and then we could jump into the P&L statement too. But for a law firm business, I could tell you Thomson Reuters, I could tell you LexisNexis, I know the vendors, I know your name. When we see the vendors come through, we have so many law firms using the same vendors. We intuitively know what type of expense that should be, right? So the businesses, the balance sheet is usually a simple one. Most of our smaller firms aren't going to have lines of credits or loans on the books, but the P&L is going to be pretty simple based on the fact that it's just a law firm business. So it's pretty intuitive. But to your point, sometimes they want extra reports. Maybe they want a cash flow analysis report. Not all of our clients need that. Maybe they're starting out and cash is going to be tight and they really want to understand that, right? So we have a conversation with them about what is it that are their pain points. A lot of the pain points is around billing. A huge, they hate doing billing, but it's so integral to their business is getting those bills out and getting paid, right? So that's one that could be a little different, unique, is how people bill, flat fee, hourly, contingent, and how we handle all those.
Just to bring it back to billing correctly, right? Being able to account for all of the hours worked, not only by the attorneys, but also by the paralegals, right? That they're leveraging and hiring to be able to delegate the work that obviously should be delegated at that point in time. I'm trying to find the best way to say this. What are the benefits of going forward and being able to delegate this, being able to set up these systems, right? How does this help out the law firm who is cash strapped right at the beginning of the processes?
That's a great question. Actually, I'm going to take it a tier higher for you, Brian. And I'm going to talk a little bit about what are some of the best practices around timekeeping and billing in general, yes, right? Okay. And it all starts with the fee agreement. Okay. It all starts, it sounds silly, but I did fee agreements for 8 years when I managed law firm. That fee agreement is your first communication tool with your client, and that's where you're setting the expectations, right? That's where you're having the conversation about, this is a financial obligation. You're going to have to pay me for these services, right? So being really clear and understanding, and who's going to work on your cases. Like, you're going to have attorneys working on it. You're going to see paralegals working on it. Be very clear and letting them understand that they're going to get monthly bills or bi-monthly, every 2 weeks they're going to get an invoice from us. We're going to require them to replenish their retainer, do evergreen retainers. A lot of our profitable law firms are billing twice a month and doing evergreen retainers, right? So that's the first part. And then inside of your law practice management software, you want the flexibility to be able to set up your matters so that when it comes around to doing billing, it's very clear that that's a flat fee matter, an hourly matter, or a contingent matter. Maybe it's a staged billing matter. We bill at different stages of the case. There's a lot of different ways you can do billing, but you need to have the flexibility in your system to identify the matters as to what type of billing cycle they're going to be, so we can do batch billing, right, and be much more efficient. The other thing we want to make sure in your system is who should get the bill. Who's going to pay the invoice? Is it going to be that you don't necessarily going to send it to the lawyer? Maybe you're going to send it to their paralegal, but you have to, in that conversation with the fee agreement, ask the question, who should receive the bills every month that need to get paid? Who should I copy on the invoice? So we can build that into your law practice management system as what people are bill recipients for those invoices, because you want to make sure it's landing in the right inbox so it gets paid, right? So it's all, and then we also want to be able to track your time. That's how it happens, right? Can't make money if you're tracking our time. And this is the biggest pain point for lawyers. So you want to be able to use technology and integrated tools to help you on that end, right? So some of the tools we use is we use a tool that when I send an email, I get a pop-up that says, "Hey Peggy, I just see you sent an email to Brian at Shift Six. Do you want to bill that time?" And I'll click, "Yeah, I want to bill it." And it lets me create a time entry. Or I might say, "You know what, make that non-billable. I'm not going to bill it, but I might want him to see that on the invoice, but I didn't charge him." So having a law practice management software that integrates with your email product and allows that ability for you to easily bill for emails, right? Emails is probably one that lose a lot of time. Lawyers lose a lot of valuable time. It takes time to intelligent reply to an email, trust me, right? So we want to do that. The other thing that we're big on is making sure we're using calendar integrations so that when you're on the calendar and you book an event or a meeting, it shows up in your law practice management software so that you can click a button on the calendar and say, bill for that hour of time. So all these little simple ways of making sure you're capturing all your time all month long is really important. Okay, and it goes back to your utilization. If the utilization's low, you're going to know that the owner's going to be like, "Joe over here is missing something because I know he's here working, but it ain't showing up on bills. So he must not be doing a good job of capturing all his times." The other thing is we want to make sure that the bills are easy to edit and draft so the client can actually see what's on there, and then make it easy to send the bills out and get paid. All right, so you can send the bills out through your system, get paid with credit cards or e-checks or however you want, and then have that money flow into the business. It's simple. It's not complicated.
Yeah, something I observed actually along the lines of time tracking was, with my background in legal tech, I worked with accounting software and matter management software. And when lawyers started using the built-in time tracking, feature within these softwares that we were able to provide, they actually started billing more because they were billing more accurately as opposed to, thinking, okay, I spent this much time on this.
Yeah.
And it actually helped increase their revenue by about 20, 30% just by accounting for the work that they're actually already doing better and using those tools that are already come integrated.
That is a great point. I can tell you that if they're not capturing that time in the moment using the technology available,
it's gone.
They're going back and they're undercutting their time totally because it's hard for them to really say, "Oh, I spent 15 minutes writing that email." Well, you probably did. Yeah, that's a great point, Brian.
Yeah. It's a disservice to themselves, right? Especially when they're trying to establish themselves and get their business really rocking and rolling like they want it to be.
So one thing I want to tie back to that discussion about billing practices, and in general, a profitable business is use checklists. So we use a checklist for everything we do at CPN Legal. Our invoicing team has a checklist for each client's invoice process, and it's very detailed. What pre-bill reports do we want? Who needs to edit the bills? Who gets the, who's going to approve them? They're going to get sent out, and then a post-billing report so they get a summary of what money needs to be moved and things like that. So invoicing checklist. Create a checklist when you take on a new client, setting up the new matter. If we're talking about making that matter dashboard have really relevant information, such as what type of billing should this account be set up with. Make sure that checklist includes all those required fields you want to have set up on the matter. And then we do a month-end checklist. So all of our bookkeepers follow a detailed month-end checklist that goes through each step of the reconciliation process through the quality assurance. I think you asked a question earlier about how we communicate with clients. When we reconcile our clients' accounts, they go through a quality review process by our senior accountants. So it's a very strict process. All of our clients' month end is reviewed by a second set of eyes before they get their financial reports, right? And they have a checklist. So there's 4 different types of checklists we use in our business. And please, if you just take the time to create them, sometimes it's painful to stop what you're doing and spend 20 minutes to start that checklist, but you'll be thankful you did, because now you have a consistent way when you train new staff to tell them what to do.
Right. And I assume that's also how you're able to involve, key stakeholders, admin staff, or any accountants that the firm already has in the
Yeah,
processes to make sure that they continue those practices effectively.
yeah, exactly. Yeah.
Very nice. Very nice. All right. So once you've established, the workflows, how do you maintain the consistency in the compliance and transparency with the law firms? Is this something that you typically go back and, recoach, or is this something that, is the firm's responsibility at that point in time?
Well, we take the time to do that quality review every month. Okay, we make sure, and we
Right.
actually like to meet the CPAs. So we actually ask for an introduction to their accountants early on in the engagement, because we want to know what they want to see, right? We also don't want them in there making wrong entries, which they can sometimes do. They don't understand trust accounting like we do. But establishing that rapport right away is really important for us, and having it go through our QA process as well, and having our clients understand sometimes they want their financials really quickly, and we have to understand it takes time to, have them by the 5th of the month. No, you can't have them by the 5th of the month. The statements don't come out to the 2nd of the month, and then we got a process we have to go through. So we have to really communicate and let them understand it's not something to rush through, right?
Right.
We have processes we have to follow to be, to your point, to be consistent and deliver a quality project. And if we can teach them those processes and the need for that quality control, it makes them a better business owner.
And how do you measure the success of those financial workflows? Is it typically shown by the increase in revenue and maybe a decrease in questions? How can you identify that?
That's a great question. It's definitely the success level is individual for each law firm.
Okay.
Some law firms are really content being a one-person shop. They have no desire to ever hire anybody because they don't want the overhead, right? And they just need to support their family, right? So we keep that's something that's a little simple one to follow. Am I bringing enough money? Am I paying myself enough money to cover my expenses and support my family? Then we got the ones that have very energetic and they want to grow, right? Those are the fun ones, because then we can dig into them and we can talk to them about, hey, it's time to hire somebody. Hey, but so we look at their profit analysis, okay, before they come to us and say, hey, I think I'm ready to hire somebody. Well, before you hire somebody, we want you to be at a certain profit level to
Right.
absorb that. Okay, maybe it's 17%, maybe it's 20%. But we want to make sure before they just knee-jerk hire, right, that they've looked at their utilization, have found that they have a need to hire, but also that their books they're going to be able to support that hire, right, with enough cushion, because it's going to take 3 to 4 months to bring that new person up to being a productive biller. So we need
Right.
to absorb about 3 or 4 months of that, right, Brian, before we can actually see them become profitable, right? So we have those types of conversations with them. And I think that's the other fun conversation to have as they start growing is things like, hey, I want to start a 401k, right? These are things that as a business owner, they get excited about because they know that they now have it's like they're validating their business, right? We're
Right.
hiring, we're going to add a 401k program. Hey, let's start paying for health insurance. And all those things are expenses that become an expense burden to the business, which is where we got to help them understand how we're going to absorb those new expenses into your current revenue, or what has to change on the revenue side.
Right. And I imagine as, you're helping them through this, you are able to lay out options, right? Whether it be direct hire, whether it be outsourcing certain processes within their firm, bringing out outsourced employees
Yeah.
to help with a certain process in its entirety. That's
I'll tell
probably
you,
what.
yeah, and then we're going to get to success stories. I know we're going to run out of time, but since you hit on that right now, the most painful thing we go through with them is they go and hire. Okay, and hiring, you got to set up payroll. It's not easy. And what if they live in a different state? Now you got to set up
Right.
payroll taxes in a different state. It's complicated. And then they hire them, and it lasts a month. And I'm getting the email saying, Peggy, Joe didn't work out. We got to fire him. Can you run his final payroll and get him out of the system? Like, oh my God. So then they rinse and repeat and they try it again. You know how much time they've wasted starting to train that employee? Just the payroll costs associated with that. So my advice when a lawyer is at the place saying, I think I'm ready to hire, I say, don't hire yet. do an outsource, find somebody you want to try. Okay, work with a company like yours, Brian, but find somebody you want to try and let's see if it's going to work. Because there's a lot of things that as a lawyer, they have to learn to delegate, and they're not great delegators, to be honest. Most of them are. So there's a lot of learning that they're going to have to go through when they start
Right.
taking hires. It's just a risky thing, and it's very expensive when they try to go hire and do it themselves. And I see it a lot,
Yeah.
Brian.
Yeah, and something that we see on our end is kind of the flip side of that, right? Where people have already tried the outsourcing route and they've been burned, right? They either went to Fiverr, able to generate someone that's able to do, some part-time work for them through there, and the consistency was just not good, or just consistent overall, right? And it gets to a
Right.
point where they believe that the outsourcing route is no longer something that they can entertain because they've been burned. And when we get those people, those are honestly my favorite clients to work with, because I get to educate them on how we do things differently, right? How we provide support for them, how they don't have to worry about things like payroll, taxes, benefits,
Yeah.
because we encompass them for them so that they can just focus on running this new employee that they have, that they've chosen, to their full potential, managing and continuing that growth within their organization. So
It's a
I
great
completely,
solution.
I
Yeah,
completely
you
see it.
guys have a great solution because I'm seeing the bad side of it too. So yeah.
Yeah, and I appreciate that. Well, before we run out of time, I want to make sure you can share some success stories with our
Yeah.
guests here today. So
Yeah.
feel free to dive in. If you want to give us your top three, I'd love to hear them.
So I had an immigration lawyer. We have a number of immigration practices are hard. God love them. They're doing such a great thing. But it's a tough business. It's probably one of the ones that we find profitability analysis to be the toughest on, because a lot of their clients come to them on wanting to do payment plans and set things up right. So I had a law firm come to me. She was a solo. She does great work, but she couldn't understand why every week when she went, every other week when she went to run payroll, she's looking at the bank account. We don't have enough money to run payroll, right? So we put her on a cash flow analysis. So every week, every Monday morning, she got a cash flow analysis report that projected what happened last week, okay, and what's going to happen in the future weeks based on our trends. And we also went down and did a little bit more deeper analysis as to flat fee. It's all flat fee, right?
Right.
How many flat fee cases do you have to get a month to cover your expenses? And where are we at every month on that? So we did a little bit of analysis, say, what's your average flat fee case? How many of those do we got to get a month to cover your expenses as they come in? So on her cash flow report, now she had nice little graphs, a nice little analysis. She knew where she was at on March 23rd, that she was $15,000 below her need, her monthly need of bringing money in. So she had to go kick some butt and get some people to pay, or sign these people up that had been lingering, right? Let's get going. And we did a lot of AR analysis. To tell you the truth, a lot of our work on helping her was looking at her accounts receivable and really trying to understand what's good AR. I call it the low hanging fruit, and what's stuff that's 3 or 4 years old. Let's just get it off the books, and so you're not looking at that ugly number every month, right?
Right.
Yeah, so that was a nice one, and we helped her understand her finances better, right? And got her she was so fun to work with, because the first time we did that cash flow analysis, she about cried. She was like, "Oh my God, my business is so bad." And I'm like, "No,
No, that's
don't
not
think
it.
think of it as, and she's a very generous person. After talking with her, I found she was giving away a lot of time, right? I said, you got to charge for that. You have to be a little bit more diligent. So
Or at
that
least
was
being able to track it, right, and take it into account so that you can identify how much time you're actually giving away.
yeah,
Because, like you said, once they have those figures in front of them, it's like you remove the veil from their eyes.
right.
Yeah.
So, and another offer real quick was one that was spending a lot of time trying to get loans. She was constantly borrowing money, and we had to really evaluate why. It was a self-fulfilling prophecy now. It was just a habit. She would get into the habit. If she was getting low, she just would go borrow another $5,000 or $10,000, and then she'd get out of it and she'd go back and get more. And we have to break this cycle and find out why it's happening. And it was happening because she was doing a lot of owner draws and had herself on salary. So she was subsidizing her owner draws by taking on loans
Mm.
instead of instead of trimming her own personal expenses. But when we saw that cycle happen and that light went off, I said, do you notice that you're taking the loan out in the weeks that you're taking an owner draw? Maybe we need to evaluate that a little bit better, or bump your salary. And it was like a light bulb went off moment, which was always fun to see.
It's taking that 360 view and really just understanding where those deficits are, right? You're not there to tell them that they're doing what they're doing wrong. You're just really there to shine a light on how they're doing things and shining a different light as to how they can be doing things for just better profitability overall.
Yeah, that's it.
Awesome. Well, Peggy, I think we're out of time. I really appreciate you taking the time to join us today. I don't think we have time for questions just because we allotted an hour and I want to be respectful to our guest times. But again, just thank you for being here with us. To our attendees, we will be sending out some information just to follow up and, get in contact with you if you're interested in learning more, connecting with Peggy.
If anybody has a question, feel free to just ping me via email.
Yeah, absolutely. And I'll be sure to share your information as well on my follow-up email to everyone. And for anyone interested in attending any future webinars by Shift6, we do have one coming up shortly. It'll be April 25th. And the topic will be a remote leadership mastery, essential skills for managing virtual teams. So if you are interested in exploring how to manage a virtual team, make sure you join us and sign up for that webinar, and we will see you then.
Thanks, everyone. Thanks, Brian.
Awesome. Absolutely. Thanks, Peggy. Take care.